How to improve your trading. Hi, it's Charlie giving you your Wednesday's video. Now, what I'm going to do, this was a question that I had on the in the questions a couple of weeks or so ago, saying, Charlie, can you make a video about what is the correct and best way to improve your trading? Why do you think traders should, well, what do you think, it says here, traders should do in order to get more profitable? Okay, so bearing in mind, I'm only going to do a video here for 10 minutes, so I can only do so much in that sort of time. This is quite a long, expansive subject. And of course, everybody trades the market differently. But the question is, what is the correct and best way to improve your trading? So we'll go through some steps there. So the one step from a technical perspective, and we're going to go through the technical charts here in a minute, but from a technical perspective, one way to help improve your, or there's two ways to help improve your trading. One is top-down analysis, analysis. So that is multiple time frame analysis, basically. Another one is intermarket analysis as well. I find that traders look at a single market, look at single patterns on a single market, and that's their frame of reference. And there's nothing wrong with I'm a big believer in focus, in trading just a few markets. That works for me, but it doesn't stop me from analyzing a range of markets. So if I'm going to do some analysis here on the euro dollar, I'm going to still be looking at a number of other markets as well. I'm not going to make a decision just based on what the euro dollar chart's doing. I'm going to be looking at, well, what's the dollar index doing, which gives us a different view essentially. I want to know what's the bond market doing, what's the stock market's doing, because they are all interrelated. And this brings me back to these idiots that you see putting adverts on YouTube. I see them as well when I play a video. Oh, technical analysis doesn't work, and all of that nonsense that you hear. These idiots out there saying this sort of stuff, and because analysis is what works, and technical analysis has been around for hundreds of years in many formats, going back to Japanese candlesticks, which are 300 years old. So what we are doing when we're trading the markets is we are to a large extent trading mass human psychology as well. So there's a sentiment element as well. Now, if you're intraday trading, do you need to know sentiment and all these other bits and pieces? Not necessarily, but certainly a top-down approach using multiple time frame analysis is going to be important to you, and as well a bit of intermarket analysis. Even when I used to intraday trade, I'd always be very cognizant of what the other markets were doing, which were relatable. Okay, so those are, and I'm going to go through those elements in a bit and talk about technical analysis and what you can do on your charts. One other thing that I think is overlooked, which is logging, not just the logging of trades, but you must log your trades. But what's more important is the reviewing of your trades as well. You must review your trades, because if you get into the habit of reviewing your trades, then that acts as a it's like having your own personal mentor when you start reviewing your log trades. So you log your trades over the course of, let's say, a month. It depends on how many trades you take in a month, but otherwise, if it's too many, if it's a lot, then you might want to do a review every 2 weeks. Anyway, or if you're doing day trading, you might want to do your review on a Friday or whenever you want to do it, or on a Sunday. But the point of reviewing is for self-improvement, but also for self-confidence. So you imagine if you didn't log your trades, you will just be measuring your success or failure by your P&L. And that is a stupid way of assessing how you're getting on, because you could be losing money but be doing all of the right things. I'll say it again. You could be losing money but doing all of the right things. There might be absolutely nothing wrong, But then what so many traders do is they start going out searching for change and thinking they either have to fix something, change something, or go and find another strategy because they've not been making money over this past period. When in fact, it could be that the approach, the method that they've been using may well have been fine. It's just that it's been in a flat or drawdown sort of period. So if you judge your performance based on your P&L, you're missing out a lot. You need to judge your performance based on how well you follow your processes. The P&L itself will take care of itself over the longer term, but in the shorter term, anything can happen. So, for example, you're doing a review of your trades over the last, let's say, the last month, and you might find, let's say your P&L was a minus figure. So whatever it is, let's say minus 3% over the last month is your P&L. So if you were just looking at your P&L in your trading account, you'd be like, oh God, I lost money this month. But if you go and do a review, you might find, oh, do you know what? There was 2 trades in there over that month that I just got stopped out, and they ended up going all the way back up, turning all the way back up, and got to my target, what would have been my target. Or it could be that there's a couple of trades in there that got really close to your target and then rolled all the way back over and became break-even trades. So by reviewing, that helps you remember these things that have happened. Now, and then you look at it and you think, well, do you know what? It's fine lines. A lot of the time, performance in trading is fine lines. So you could say, well, if those things hadn't have happened, that wouldn't have been a minus 3%. Maybe it would have been a plus 3% on the month. Fine lines. So, and what it does, it gives you the confidence to say, actually, I don't need to change anything. My trading is fine. I just got a bit unlucky on a couple of trades. But if I carry on with this approach, there will be those trades which do get to the target. There will be those trades which don't just get nicked out as well, and only to go higher again. So doing regular reviews is a massive confidence booster in that you can see exactly what happened to all of those trades after the fact, after you got stopped out or came out or whatever, and you can use it as a self-improvement tool. So logging and reviewing is a massive benefit to how you can go about improving your trading, not jumping around to another strategy, another strategy, and another strategy. Now, talking of jumping around to strategies, I think that strategy hoppers, that's a big issue for a lot of people anyway, because too many people focus on a blinkered approach to trading, focusing on a given strategy, so to speak, and they think that's going to make them all their money, when in fact there's a lot more to trading than that the markets are a bit more complicated than just simply following a given strategy. You need to put your trading into context, and your trades into context, and we can do that a number of ways. One is a top-down approach, and 2 is an intermarket analysis approach. So just very quickly, because I've already realized we're already 8 minutes into this video here, one thing you can do as well to start off with is just take everything off. If you've got any indicators on your chart or whatever, just take everything off and just go back to the basics of a good old-fashioned technical analysis. Yes, put some trend lines on, put some channels on, put some horizontal support and resistance on, and you'll be amazed what it opens up. Like I said, don't listen to the idiots out there saying technical analysis doesn't work and all that. All they're doing is preying on your uncertainties, because they know that 80% of people out there are losing money or not really making any money. So what they do is they prey and say, yes, the reason why you're not making any money is because technical analysis doesn't work, or you need to do it this way. I've got the holy grail, so to speak, of approaches, because they know that the odds favor, if they're putting adverts out there, odds favor that people are going to watch their videos saying, oh my God, yes, that must be the reason. Do a little bit of delving on some of those characters, and very quickly you get 2 or 3 pages down on a and you'll soon find out on a Google search or whatever the realities. So yes, take it back to basics, do some analysis. So yes, put some levels on. So very quickly I can put some levels on my chart. In fact, actually, I'm going to click, I'm going to go out to a monthly chart first of all. So let's go down to a monthly chart. Yeah, let's do a monthly chart first of all. Let's put a level. Whoa! Oh, okay. Delete that. Okay. Okay, it's put all my levels on for me. It's cheated. I tried to hide them. It's put them all back on. So okay, here's one I've prepared earlier. So I've got, if I go down to the daily chart first of all, you can see that I've got a nice rising channel here, and these things do work until they stop working. That's the whole point of technical analysis. You're not trading certainties, 100% certainties, but there aren't 100% certainties with anything you do, but you are trading edges and probabilities. So we can see at the moment the euro is trading within an upwards channel. So let's take that off now. I'm just going to hide those. And let's now go out to the higher time frame. Let's go out to the weekly chart. So we can see on the weekly time frame, I think I need to go to the monthlies really, but this level down here corresponds to these levels coming all the way back to 2015. So to start off with, I've got that level there. We can see, as so often is the case within technical analysis, price got above it, pulled back to it again just a few months ago this year, or a couple of months ago this year. No, it's not. It's a month ago. I think it was in March. I'm on a weekly time frame here. Before then bouncing up. Now I've got another level up here just below 112. So we can see there's some price action here, a low here, lows over here, highs through here. So this zone around the 112 mark, maybe a bit lower, is the next logical area where probabilities dictate that if price can get up to there, that it might find that as a resistance point or resistance zone. There's an interim level here at 110.33, I think, is the high of that week from the beginning of February of this year. So very quickly we start to build a pattern by using a bit of intermarket analysis, and we can say, right, I've got some levels here. We've come down to this level here. That would have been a buy zone down in that area previously. And as we come up at a minor point, then if we can get up to that 110.33 zone, then that could be a minor sell zone. But within the context of this sideways range here, the euro's got more potential in it to get to that zone over there. Now, it doesn't mean to say that it might not pull back first and do all of that. So you have to allow for all of those things. Now, it doesn't matter. I know I'm on a weekly chart. Don't think, oh, I only trade off of hourly charts, Charlie, or 4 hourly charts. It's the same concept. This could be a 4 hourly chart, and you're doing your analysis on a few time frames. And then once you've got your analysis, then you're looking for entries to say, okay, this market is going up. Okay, it's nearly at a potential double top, but let's just run with this for now. It's going up. If it does a bit of a pullback, do I want to be a buyer of this market? The simple questions. When it comes up to this level up here, do you want to be a seller? Do you want to be a profit taker, or do you want to be an outright seller? So that would be an important level, a zone up there. And you just put a story together. That's what you're doing. And then you use the techniques that you have for entering on the smaller time frames. So this is on the weekly chart. If I now take this back to let's say a daily chart again, and say, okay, well, if the euro does get up to that zone up there, what techniques can you use? Reversal techniques. Could you look for certain candlestick patterns if there were reversal candlestick patterns up there? Other techniques you might want to use for if you were wanting to be a seller up there. It doesn't matter if you're wrong up there and it blasts through it. What you do know is that you're putting probabilities on your side, that if price comes up to here, out of 100 occasions, probably around 50% or more, the market will react to that zone. So then you've just got to look and use wait for an entry technique to get you into a trade like that, much like a pullback situation as well. So over time, what you're doing by just taking everything off, putting a few trend lines on and horizontal support and resistance, and I've got some more trend lines going on here. If I go out to the monthly charts, we can see the euro's breached this trend line going all the way back to 2008. It's breached here, and it's got another trend line from those 2008 highs, crossing these highs from 2021 as well, which is further out. So that's maybe for the future if the euro goes higher. So we are trading probabilities, not certainties. But certainly just by me looking at a chart of the euro, doing a bit of multiple time frame analysis, I can start to build a picture and say, okay, do I want to be a buyer of this market? If I want to be a buyer of this market, before it gets, let's say, up to that zone, what do I need to look for? Oh, okay, maybe I need to look for a pullback and what entry techniques do you want to use for that type of thing as well. From an intermarket analysis perspective, we can then take that same concept and look at, well, how's the pound dollar, for example, doing? Where's the next major resistance levels on the pound dollar and on the Aussie dollar? And then we start to build a picture as to, well, is there scope, or is it only scope on the euro? Are all the others looking really bearish? In which case, again, intermarket analysis helps us. And of course, we can look at the dollar index as well. So we start to build a picture then, and we're now getting this, we're coming away from, like I keep saying, this nonsense of people making claims about technical analysis doesn't work, because that's just stupid. And some of the world's best traders use various technical analysis techniques. And whether it's, well, whatever, Elliott waves to traditional chart patterns, you name it, you've got some of the world's most famous traders in the trading communities use traditional patterns, flag patterns, flags, bull flags, bear flags. Like I've even said, Elliott waves. Not that I use them, but there are Elliotticians out there. It's not my bag, I must admit. But Gann techniques, you name it, simple breakouts as well. There's plenty of people out there, good solid traders who have been in market wizards, who just use breakout techniques as well, triangles, you name it. So anyway, you're building a picture there, plus you've still got entry techniques that you can use, and you're not then subject to just following some blind mechanical trading where it just tells you when to buy and when to sell. Leave that to the people out there marketing that sort of stuff, and use a bit of context within the markets. That's what I've always talked about over the decades, really now, is the context. You build context from doing analysis and looking at a multiple time frame approach. And doing that, logging your trades, reviewing your trades, you'll be amazed how much you can improve. And really, I'm scratching the surface here. I've already spent 18 minutes doing this, and I can't possibly do any longer. But this is where the work comes in. It's in the analysis. And the better you get at the analysis, and it's not that difficult, but anyone can put some lines on a chart, but you start getting better at reading it, interpreting it from one time to another, and that's where the gold dust really is. Hopefully today's video has been of use to you. I'll leave you to it. Have a nice day.